Welcome back to the channel. In the video today, I will explain the intercompany stock transfer process and the related accounting entries. This is the second process I explain in intercompany processing, and I always recommend you watch the processes in the same order I published them in. So I created a playlist with the videos in the right sequence, and I will leave you a link to the playlist here. The intercompany stock transfer is equal to one sister company doing a sales process and another sister company doing a purchasing process. I will give you more details after the intro. In the example today, we have two sister companies, one of them in US and the other in France. And France is asking for some stock from US. Now remember that these are two different legal entities, which means each one of them will have its own accounting entries and its own accounting records. So this process is exactly similar to France buying the products from US and US selling the products to France. And this is how it will be recorded in their books. Now, before we look into the process steps in details, I have already recorded two different videos, one of them explaining the purchasing process and the other explaining the sales process to external parties, but still, it will be exactly similar to what will happen when these two companies buy and sell to each other. So I recommend that you watch these other two videos before you continue watching this one, because today I'm not going to explain these two processes in the same level of details. So if you haven't seen the order to cash and the procure to pay process videos, I will leave you a link here, and I want you to pause the video and go watch them, then come back. Are we good now? You already understand the order to cash and the procure to pay processes? Let's go on. The intercompany stock transfer process starts with the creation of a purchase order in France, which is exactly similar to any purchase order we create to any external supplier. So it has the products, the Incoterms, the payment terms, and so on. This purchase order that we created in France will also act as a sales order in US, which means that all the following steps that will be done in the selling side in US will be done with reference to the purchase order we created in France. So after we created the purchase order, the second step is the company code in US is going to create an outbound delivery, picking, and the goods issue with reference to the intercompany purchase order. Then we go back to France and we post the goods receipt for the products and the supplier invoice for the intercompany supplier of US. And we go to US and we post the sales intercompany billing document for the intercompany customer of France. These steps don't have to follow exactly the same order I explained. So in some cases, we may have the billing documents before we have the goods issue and the goods receipt. In some cases, we can have the goods issue and the goods receipt posted at the same exact minute. So for example, if once we issue the product from US, these products are the legal responsibility of the company in France, it means that once we issue them in US, we are also going to post a goods receipt in France at the same minute. But if the products will stay in the legal custody of US until they reach the warehouse in France, it means that we are going to post the goods issue in US, but we post the goods receipt in France only when we receive the products actually in France. So this process is very flexible and it depends on the internal policies of any group of companies. Now let's look into the accounting entries in every step. When we create the purchase order in France, there is no financial entry. Then we move to US and we create the outbound delivery and picking, and also we have no financial entries. Then we move to goods issue and here we have our first financial entry. So the entry will be a debit to the cost of goods sold account and a credit to the inventory account. Then we move to France and here we have the goods receipt financial entry, which is a debit to the inventory account and a credit to the goods receipt invoice receipt. Then we have the supplier invoice financial entry, which is a debit to the goods receipt invoice receipt and a credit to the intercompany supplier. And we go back to US and here we have the sales billing document, which is a debit to the intercompany customer account and a credit to the sales revenue account for affiliates. And also normally you would have input taxes and output taxes posted in the accounting entries, but I'm not going to explain them today to keep things simple. Now that we understand the debits and the credits, let's look into the values that will be posted in the accounting entries. In the goods issue financial entry, we have a debit to the cost of goods sold account and a credit to the inventory account with the cost value in US. So if the item is using moving average and we have a moving average cost of 100 USD per piece, and we are issuing 100 pieces. This means that the debit will be to cost of goods sold for 10,000 USD and a credit to the inventory for also 10,000 USD. And then we post the goods receipt in France. And here we have an entry of a debit to the inventory account and a credit to the GRIR account. Now, the value of this financial entry will depend on whether we are using standard costing or moving average costing, because the debit to the inventory and the credit to the GRIR will be posted with the cost of the inventory in France, which is completely different from the value we have in US, by the way. Now, in my example today, I will assume that we are using moving average costing in France. Now, before we continue, if you don't know the difference between standard costing and moving average, again, I have created a playlist and several videos explaining this. And I'm really sorry, but you need to watch them before you continue watching this, otherwise you'll not understand what I'm explaining. Now let's go back to the topic. So in the example today, we are using moving average costing in France. And let's say that our purchase price that we maintained in France, the purchase price from US for this product is 120 USD or 100 euros. So the financial entry will be a debit to the inventory account for 10,000 EUR or 12,000 USD and a credit to GRIR account for the same value. Then we post the intercompany supplier invoice in France. And here we have a debit to the GRIR account and a credit to the intercompany vendor. And the value of the GRIR will be exactly the same as the one we posted when we did the goods receipt. So it will be 10,000 EUR, which is equal to 12,000 USD. And we also have a credit to the supplier account for the same value of the purchase order. So the total value of purchasing, which is also 10,000 EUR or 12,000 USD. Then we go back to US for the intercompany sales billing document, and here we have a financial entry of a debit to the intercompany customer and a credit to the sales revenue. Now the value of this financial entry will be the value of the sales price. So we have the sales price in US multiplied by the quantity that we sold, and this will be the value of our sales revenue. Now one thing to pay attention to, the sales price in US is exactly the purchase price in France. So the sales price in US is 120 USD per piece. So the total value is 120 multiplied by 100. This is 12,000 USD. So the financial entry will be a debit to the intercompany customer for 12,000 and a credit to the sales revenue affiliates for also 12,000 USD. And now as you see, the intercompany receivables and the intercompany payables both have the same value. And this is a very important reconciliation point. We cannot have any differences here, because whatever we sell from this side for a value, we buy it in the other side for the same value. We cannot have any differences. I have also created a configuration document explaining how to configure this process on SAP S/4HANA. This document is available in the Elite Members folder. In the next video, I will run a full demo for this example on SAP S/4HANA 2020. The video will be released next week, but I'm giving early access to the channel members. So if you are a channel member and you would like to watch the demo today, you can click on this link. Thank you for watching, and I'll see you again soon.